Hey, Mark, how you doing? Hey, everybody else, thank you for being here. Sorry it's a little bit late, 2:42. Gonna make me a seltzer water. All right, guys, how's everyone doing? What happened, Mark? Did you spy? You got your strikes run through? Yeah, that's the definition of a first world problem. Now look what Jackson brought for me. Jackson brought this. So this means, hey, Dad, my bowl is empty, and you got to feed me. Jackson, come here. Come here. Let me see you. Come here. Let me see you. Give me a kiss, and I'll feed you. All right. Hang on, guys, just a second. I should have done this first. Come here. Come on, Jackson. All right, there we have it. Thanks for that. Thanks for your patience. All right, let's remember to share the screen. We got Jackson fed. See how everything is going. Yeah, he's not shy about bringing this bowl over. I don't think I fed him yet today. Usually he eats once a day. All right, one big meal a day. All right, let's see what's going on. I haven't even checked the market in a while. It was dead last time I looked at it. 243, is there any trades? Well, look at that freaking thing. Holy cow. Congratulations to Exponential in my Discord. My gosh, look at the triple gap play. Look, a gap there. There's not one, no one has made any trades at 101 lately. There is no volume there. It gap past it. And it gap past it again, and then a gap down past it. And now today it gapped up past it again. My Lord. Well, anyway, just looking at kind of trying to, what I like these volume profiles for is tuning out the noise. You can see it's probably got about where it's going. It's probably, you can see there's a range up here. It's probably trying to, that's where bulls want to get it to, or higher, but at least up here. Up here is better than down here. Down here, if it fell back down here again, it would be reverting to the mean. The mean is literally, in this time frame, is literally here at 73. Anyway, this thing's a monster. Look at this. I mean, this thing's a monster. All right, so that's great. Same person recommended this company. Whatever this thing is, and look at this monster. Look at that. Remember that we looked at it this morning, and I said it looked like the 10-year because it does. And watch, I'm going to bring up the 10-year, and it's going to look similar. Well, it looks like the 10-year does on the 30-minute time frame. It doesn't look like the 10-year does on the daily time frame. All right. Well, anyway, Jackson. Jackson, what are you barking at? One of my dogs has been sick today, that white boxer. He was gone this weekend, and he drank some water from a pond or rainwater. But he got up this morning, and he's been sick all day, sick as a dog. Jackson's doing well, though. All right, so look at this freaking ES up 23 basis points. I mean, we might just stay on daily charts through the summer because the 30-minute time frame, you know, when the market stops moving. Look, today's action is totally within the previous day's action, right? Well, it looks like we got a little bit above it. We'll take it. It's better to be grinding up than grinding down. Of course, we don't grind down. We fall down and we grind up. All right. Well, I got some bad news, or not really that bad of news, but well, let's talk about my model portfolio. Well, look at this. Max's model up 1% today. You've got to freaking love that. The SPY is up. I checked it out. I don't know why this isn't working, but the SPY is up a little bit more than my model. The SPY was up 1.3. We can just go look. I don't know why I didn't pick it up. Yeah, 1.3. But we will darn sure, I will darn sure take that. Look, everything was up. Even my hedge ones, GDXY and TLTW are up a little bit. YQQ, I think YQQ surely was down, but maybe not though. When the market's just barely up, lots of times both sides win. Remember, when you have YQQ and whatever other bullish covered call fund based on the Qs, you're synthetically in a iron condor. So you want still price movement. You don't want wild swings back and forth. All right. Well, these are all the stocks just individually, what everything's up or down. Doesn't have anything to do with the weighting in my account. GDXY is up 30 basis points. AMDY is up 27. I see it's a great day. Great day. All right. I was really liking this high yield technical analysis, HYTA, and I was trying to save space, and I threw it away. And the formulas, oh my God, I've probably been working on these formulas more than a year. I thought I had it copied, but all I have is a copy of the numbers. I don't have what's behind the numbers. I didn't copy the formulas over. Anyway, here's the most recent list, or here's a somewhat recent list. Let's go over here. This one was just the other day. Well, no, that one wasn't. I put it down here. This one's just the other day. Number 1, Snowy. Number 2, TSLP. Number 3, NVW. Number 4, GLDI. Number 5, Dizzo. Number 6, XYZY. Then Maxi, then AMZ, MSFY, NFLP, QDTE. A Monsters Fund from Brownhill, Goop, TSMY, GPIQ, FIBI. Oh, I forgot. Is there a trade we need to do? Shoot, let me check these things real quick. You guys are just talking amongst yourselves. Henry, I'm glad that you are happy with Alti. I feel really bad about talking so good about that because it is one of the more high-risk funds out there, and I just am in love with that fund. Same reason Jay is. It's just because we're option fanboys, and that fund's the closest to a hedge fund. Not really, but it's the closest as far as the wide variety of trades. It's the closest in the sense that it can do any trade, kind of like a hedge fund can do, basically. Where it's not just a covered call fund. Like QYLD they have to just sell an at the money call. They're following an index. Their managers probably get paid to stick close to the index. Yeah, I'm talking about ULTY. But anyway, that's on QYLD. But on ULTY, they don't have to sell an at the money. They can sell an in the money. They can sell a spread. They can do a risk reversal. They can do a butterfly. You heard Jay say on my interview the other day, they can do butterflies. Anyway, so Alti's the most creative as far as option bros go. And really, I'm starting to increasingly like GPTY, maybe as much or for a different way. But let's line up GPTY and ULTY. And let's see. Let's take a look at them. Where's old dividend? Where's my old dividend channel? But GPTY I like because the stocks are bluer chip, so that means a little bit lower risk. And I like that GPTY has a put spread, which is in theory supposed to lower the risk, although it didn't really seem to work this last time. I need to get in the middle of that, but let's compare GPTY to ULTY. Now, ULTY doesn't have put spreads, but they do have puts on each individual. They typically run callers, I should say. Lately, they've almost always run callers. So they do have some put protection. They protect the stocks individually, which is probably a better idea for the way they do it, because some of the stocks they use aren't going to be super correlated to the indexes. Well, GPTY uses, the big stocks that are correlated to the index. So I think it's safer. GPTY buys a put hedge. Let's see, GPTY. Speaking of put hedges, I don't have one on right now. Maybe that'll be the afternoon trade of the day. Let's maybe look at some insurance for a couple of weeks in case this thing decides to pull back. And I'll put it on in real life. All right. So if you want to look here, if you want to look to the lows, GPTY actually was ahead of Alti at the lows, although they were close. But that really surprises me. Really, I would have thought GPTY should have done a little bit better. But and then ULTY is dogging it on the way back up, right? Or they're beating GPTY. Let's look at yield. So this is 0.36. So we'll just round that to 0.33, and then we'll multiply this by 3. So it's about $15 over the course of a year. It's a $45 asset, so it's a perfect 33% at this rate. ULTY paid 2.25. Multiply that times 3, you'd have 675. We'll call it $7 on an asset that costs $6. Pretty darn good. I mean, but anyway. And really, LFGY is good too. Let's compare LFGY to, but Alti really bounced back well. Whoever made that comment in the comments, LFGY I put LGFY, LFGY. Excuse me. All right. I mean, this makes Alti look really good. Alti, it went down less and it's going up more. Maybe not really if you measured it off. Let's measure it off the bottom. I doubt it's really going up more. But let's turn this to April 7th and take a look at it. Then I'm going to show you guys how to do a two or three standard deviation protection play for 3 weeks or something, 2 weeks. I just all right, so, well, that didn't really do what I wanted it to do. I wanted to go like this. April 5th's fine, all right. Come on, do you guys see what I'm doing? Oh, it's because this thing reset. Okay, so you can see, here, obviously, LFGY does have more upside power than Alti, at least over this sample size. ULTY did drop less on the way down. And if you look at it overall, right now, ULTY is ahead because of the dropping less on the way down, despite the fact that they aren't doing quite as well on the way up. Heck, they're still up 26%. And really, you could take the dividend out of there, and they're still doing really well. The dividend's only 86 cents, so you could, well, actually not. It's mostly dividend, but it's whatever. They're doing a great job. They're 617.55. It's, I guess it's all dividend that they're up. Anyway, well, that dividend comes in handy, right? Okay, check this out. Okay, I'm trying to protect against a cluster. Now, like a small drop, I just want to buy the dip, and that's nothing wrong with the market. So I would expect it to drop to 518 in the next week. I mean, that'd be fine. If it dropped to 481, this is on the Qs, that also wouldn't be the end of the world, but underneath it, you wouldn't want it to get underneath there. So we're guarding against 460 and lower. So let's look, because I'm not trying to spend a lot of money. I'm just trying to prevent a major, and I'll do this in real life, depending on if it looks good. Well, I mean, I need to put on some protection in real life. Let's see, you'll do a bear put spread. What did I say, 460? Usually I've been showing you guys broken wing butterflies, and that might work, but we can also just look at something like this. I hate Friday the 13th. Gosh darn it. Maybe just do one for 1 week. Anyway, it'll go. If it goes down Friday the 13th, it'll catch it in the next cycle also. The 9th. This takes you through the end of the month. Let's just see how much protection costs through the end of the month. All right, so 460 is what I'm trying to guard against by the end of the month. Now, 510 is the standard, one standard deviation. The market maker expected moves probably like 515. So, this 490 would be 2 standard deviations. 480 would be 3 standard. So what I'm saying is it's only $44. We can move this a little closer. I think it's too far out. I want to, let's see. So what delta is this? It's a 12 delta. So that's what we're basically buying. $62 into 800. That's about a 15 bagger if you get a 2 standard deviation move. That's the right idea. That's what I'm looking for, something like that. Hedge for the rest of the month, because I plan on doing some more earnings trades this week, and I usually do 4 or 5 earnings trades for every one put I on or something like that. So anyway, all right. So that's if the market hasn't crashed by tomorrow morning, I'll put that on in real life. I guess I could get on Tasty Trade on my phone. Anyway, you guys ask me questions though. Is there anything you guys want to see? There's that 15 bagger 2-week hedge, or hedge that goes out for the end of the month. All right. So like I say, I'd be happy to look at other stuff if there's anything to look at. Who had earnings today? Didn't somebody report today? Oh, Casey's General Store, and I forgot to look at it. Gosh darn it. $400 anyway, so we got Smuckers tomorrow morning, Academy. It's too late to do anything about that. So let's look at GitLab for tomorrow night. That we could probably, there's still time to do something. In the morning. So let's check out the liquidity, volatility, liquidity and volume and open interest, all that kind of stuff. Friday the 13th. Okay. At the money put, $49. I like that price. 160 delta. Heck yeah. Maybe do something like the 45 160. Yeah, there we go. Let's see how far out this should go. Right there. 1 standard deviation out. 69% chance of profit. I usually do 2 put spreads for every 1 call. You can vary it and do 2 for 3, but it gives me the math that I like. So that it was $100 or something with just the 1 option, 69% chance of profit. How did my profit go up? Oh, okay. I sold twice as many put spreads. Check this out. The profit's 71%. We'll go back the other way. We'll switch it to 1. $72%. Now wait, we have to. Yeah, with 1 option, you just have 69% because your expectancy is coming from the puts. Because obviously, the money you spend on the call, you're pissing away, pretty much, right? Because you're buying premium. Not necessarily, but you know what I'm saying. That all the books that teach you how to sell premium say you're wasting your money. So that's why, of course, we could even do this like this. Let's do this one 3 times. Let's do this one 3 times. And the call once, and we have a 72% chance of profit. And we increased now we can afford to take our wife to a nicer dinner. It's $263 on $1,200 risk. Anyway, I just like 1 for 2, 2 for 1. I think that just based on my experience. But there's none of this stuff's written in stone. If you want to do an earnings trade and maybe you're more bullish, just do it 1 for 1. You don't get this much of a credit. You only get $31 on $500 risk, about 7% or something, but 6% something. But you have a little bit lower chance of profit, but you have a higher. You do better if the market goes up. Anyway, let's put it back to standard and just save it. If it's anywhere near those numbers in the morning, I might do something like this. Heck, it's the money. I mean, just looking at the math of it, $150 on $800, dollars risk, 71% chance of profit. Mark, what are you doing? Yeah, why don't you guys talk for a while? You're already plus 250 on the SPY calls you sold 25 minutes ago. Those things decay pretty fast. So you sold SPY calls probably that expire tomorrow. You could have even sold ones that expired today, I guess. Hey, SB, I'm just joking. But you could have. You wouldn't have got much, 5 cents or something. It wouldn't be a smart move. Anyway, great job, Mark. Great job. Like I say about first world problems, the thing is, the only one thing that really kind of messes it up is when the market just goes straight up, because your calls get maxed out and stuff, but it's a great problem to have. SB knows all about the problem of getting the strikes blowing through. SB and Mark, all about that. All right. What else do you guys want to talk about? What other earnings trades do we have coming up in the week? That GitHub one has the right math. I mean, Chewy, does anyone trade Chewy? It's $46. Let's see if it has enough volatility. Chewy, Friday the 13th. Yeah, tons of liquidity. I think I've already simulated one in this one, but yeah, you could easily, the market's not open right now, but you could easily look at that one. That one's not bad just by itself, right there. 79% chance of profit, 8.8% chance on break even, no upside. You're just trying to make about 30% in a few days. I saw a video today that said credit spreads suck, and occasionally you see those types of videos. And the guy has a point. I mean, he doesn't really. I mean, it's better to do naked spreads. You look at Tom Sosnoff. Naked spreads and ratio spreads are better to do. Correct. For smaller accounts, a ratio spread can be turned into a broken wing butterfly. And sometimes smaller accounts just don't have the option to write naked options. But every once in a while, you'll see a video that they suck, and it is true. It's a hard trade. It's kind of a low percentage. I mean, they've talked about it on Tasty Trade a million times, but I think it's going too far to say that it sucks. But anyway, I just watched that video a few minutes ago. Let's see if any of these other trades are doing all right. We'll go down the bottom of the list. Poor man's covered call on CNK. I was trying to get somebody to do this. Let's see how this one's working out. My short leg expired. I was just trying to show the math on it. That you could buy this 27 call. At the time, it was $4. Now it's $6. Look, you could have made $2 profit. And then you could have sold this one for $1.68, but you actually got burned on it and had to close it for $3.85. So you lost $200 if you would have done this one, but it's offset because you're up about $200 on your long. So if you did do this, you could just go ahead and start selling some more at the money premium. I do that all the time where I'll paper trade one and then forget that one leg expires. All right, let's see what else we have. But poor man's covered calls and these synthetics are good for these. I think are great for these ones you want to take a little bit of a gamble on, like TMDX was a total gamble one, or well, TMDX is a good example because it would have cost at the time about $70,000 to buy the stock. Here, we can just simulate it. We'll just duplicate it. We'll duplicate this tab, and in this tab, we'll look at if we just would have bought the stock. Let's see. Let's see. All right. So if we just would have bought the stock, well, we'd have to get the old price. What was the gosh darn it? It was like 70 or something. Anyway, we'll just put in something. It doesn't matter. We would have bought the stock. It cost you $80,000, but you'd be happy because you'd be up $6,000 right now. That would be freaking wonderful. That would be wonderful. Now let's compare it to the gravy train. If you would have gravy trained or wheeled it or whatever you want to call it, you would only be up 3,600 right now, and maybe not even that. Let's look at So look at that profit loss. That's today's profit loss, not at expiration. And here is the profit and loss graph of stock. So the way with three options, the synthetically do it, instead of $80,000, it cost you $3,300. You got a credit. Instead of having to come out of pocket for all $80,000, you got a credit. Tied up some money, we got a credit, and look at your upside. You're up $4,400 right now. Yeah, sure. You wish you would have bought stock. Stock's up $5,900. The white line is me, and the green line is stock. Of course, you would have rather bought stock, but I mean, $80,000. Even if you do it on margin, $40,000 or $20,000. Let's do it on max margin. It's $20,000 compared to the gravy train. Same upside, about 80% of the same upside. Way less risk. No unlimited risk, just $3,300 total risk. The guy that bought the stock, if it would have gone the wrong way, if it would have, you can see the white line is where my strategy is, and the red line, you can see if it goes, you can see which areas it would have done better and which areas it would have done worse. But I just think it's the gravy train or the loaded dice isn't so much an option trade so much is I just think it's a tactic to get exposure to long stock in your account, especially if you have a stock that's a meme stock. I swear, I'm saying I invented this, but I didn't invent this. I saw a trade that Jay did in Netflix in Alti. But I just love this. This trade is just so flexible. So I was going to look at our GMEs. GME had earnings yet, or what did we do with that? Active date created. Let's look at expiration, I guess. Okay, GitLab. All right, there it is. Okay, it's down $7. Oh, that's the bearish shot at earnings. Bullish shot at earnings is up $30. So it probably hasn't happened yet. The hedge for next week, we just did that one. That's down $19. Look at this Oracle. Bullish earnings on Oracle. What day did they have earnings? This may have been one from last week that I just held over. But we're basically in a position right now where we have stock. It's basically like having stock. That's our profit and loss. It's like having stock with no max loss, and it's a lot cheaper, and you get a credit. Here's this NBIS. Oh, yeah, I think we've already looked at this one. Boy, that's a beauty right there. That is a beautiful, beautiful trade. I was just trying to check the comments. If you guys have any comments, I'd be happy to. Any funds you want me to check out or anything? Boy, I miss Ethan. He's never around here anymore. I hope one of you guys didn't make him mad or something. I haven't heard any problems or anything, but and not just Ethan. I don't want anyone to be mad. I mean, we want to be. Anyway, Ethan, if you're out there listening, come back. In fact, I have a video tonight I'm going to dedicate to Ethan because it's on something that he gave me the ticker to a long time ago, and I said I'd do something on it, and I haven't done it yet. But maybe I'll tag him in the comments or something. Anyway, I love people to show me. I love people to show me tickers and then let me talk about them and stuff. I mean, or evaluate them. I just need to do better about following up. I have a couple that I promised him. There's something called Robro and JoJo, which aren't that interesting to you guys probably. But I mean, I'm going to do them sometime. But then there's another one that I'm drawing a blank right now. But anyway, have a good video coming out tonight. Okay, which of the weekly paying ETFs do you like the most and performs the best in your opinion? So I don't really keep track of them in my head by weekly pay or not weekly pay. But let me just, because I don't really think that matters. So, but let me just tell you which ones. Well, I mean, the Round Hill weekly pay ones are really good. Right? They pay weekly, right? The Triple Q or QDT and stuff. I mean, those are good funds. I just can't remember if they pay weekly or monthly. My favorite ones that out of all the ones that I study all the time, I really do like GPTY, ULTY, LFGY, GDXY, and YQQQ. I really think that's the best in the breed right now, but I'm not married to any of them. If in 6 months, if interest rates are going up something else is changing, let's say interest rates are going up, I'm going to dump one of those that's interest rate sensitive, and I'm going to put riser in there or PFIX. I'm always adapting to what I see on the horizon for the market. For me, I just look at allocations or whatever. My ideal situation, Star Capital, is about 20% in about 4 funds. And one of those, possibly an inverse. Right now I have about 15% in an inverse, but basically four allocations of 15 to 25%. And that's where I get the GPTY, ULTY, and that kind of stuff. And then some smaller ones with some other stuff that you're just kind of tracking. So basically what I'm saying is my favorite funds, regardless of when they pay, is GPTY, ULTY, LFGY, YQQQ. But if you want a specific weekly one, the Round Hill one is weekly, right? And that's one of the best ones out there. I mean, you line them up, that the Round Hills, they do really well. Let's compare QDTE to Q anything. Let's compare it to QYLD just for a good laugh. That's actually not that bad. It's actually not terrible. But you could say, QDT is a good one. I really like, it's kind of new, but I think that this one is going to be fine. SDTY. Let's compare that one to the SPY. I mean, that's SDTY is a yield max version. Now, I believe are those weekly? I guess the whole question is weekly pay. Anyway, which weekly pays do you like the best, Stark? Yeah, Round Hill's awesome. There's no doubt about that. It's because there's no doubt about that. In the same way, I think that I really like the Defiance funds also, but I know lots of people don't. And I'm really excited about the lightning spread, and also kind of because I heard about that like a year ago, and Jay and when we talked a little bit about the strategy, but he told me not to tell anyone, and I forgot about it. But anyway, but I have a little bit of a vested interest in that one. But I really think, yeah, the Round Hill ones are great, but I really think that the newest formulation with the 30% cap on the Defiance will also be good. And I think Spy Tea's good, really, also. I mean, Mark, yeah, I have a small position in Misty also, Paul T, NVDY. That's where those 5%ers. I do like those, but I don't want them at 20%. I had one of them at 20%, Misty or something, or Coney, and that's how I lost in that, that's when I wasn't doing well. But since I got control of the fund, I have the bigger index-based ones at the larger allocations, and I still have 5% of some single names. Yeah, that's what else it's good for. That's what else it's good for. So I don't know if I really answered your question, Start Capital, but it sounds like we're kind of on the same page. What do you think about leverage? What about old YSpy? Let's compare YSpy to some of these other funds. Let's look at maybe YSpy against. Let's compare it to Round Hill. We'll go XDT. YSpy. Well, it's pretty much a tie, but man, YSpy did really well. I was just talking to somebody in Discord. I don't know if I have his permission, but so I'm not going to mention his name, but we were talking about leverage and different swaps and stuff and going back and forth. But man, so they lost. That's really good on the way down. Of course, they just got established April 3rd. So it's only 3 days. Actually, to drop 2.5% in 3 days or something, or 2 days is, well, anyway, whatever. But they dropped way less than the index did. Or actually, no, I'm sorry. XDTE dropped, 8% in 2 days from the 3rd to the 5th or 7th. Anyway, that was a bad situation. But I'm going to say the trade-off is YSpy is not getting as much upside. So let's compare it just off the low. So let's go. We'll turn this into April 5th, something like that, 7th. Well, I missed the. Gosh. Okay, there we go. So just off the lows, XDT's dogging it. And XDT is a bull market fund. It's definitely a bull market fund. It does better the more the market goes up. Most of these are, but XDT is particularly a bull market fund. But yeah, this YSpy, I mean, I really like, me, I'm more concerned about the downside. YSpy looked pretty good. It was a short sample size. What's the other one? Isn't there one called I don't know. There's a NASDAQ-based one too. But anyway, Granite Shares is good. I just saw Will Rind on somebody else's show. I emailed him. He never did email me back. But it's when my channel was doing really bad. He probably watched some of my shows. I'm like, I don't want to be on this guy's show. Also, the last time we got in an argument about Trump, he kept trying. Anyway, we did not really an argument, but I could tell he wasn't impressed with my liberal tendencies, and I'm not even that liberal. But anyway, all right, TQQY. Let's check out TQQY. We'll run TQQY against. We'll just run against the Qs, I guess. Okay, well. It's new, and that's only since April 7th. Let's run it back a little bit further. Let's run it back. How far it goes back. Okay, well, TQQY got more downside, and so far appears to have less upside. So I'm not impressed with that one. I mean, it's a small sample size, but that's probably why Will doesn't want to come on my show. He knows I'm going to grill him about these BS funds he's putting out. He's scared. He don't want to be on the show because he knows I'm going to bring light to the situation. I'm not going to not going to take any more of these BS funds out there. Anyway, Mark, BitTEX is double leveraged and you have 600 shares. Well, you can sell covered calls on anything with enough liquidity, with the two-sided market or whatever. All right, guys. Well, if there's anything else you want to talk about, put it in the comments. But otherwise, I'm going to let you guys go. I've got stuff to do. I'll get that video out for Ethan. It's a really good. You guys will like it too. And maybe it was one of you guys, but it was a ticker that it was either Ethan or maybe it was one of you guys gave it to me, and I like punching down like, oh my God, that's right up my alley. And I never did do a review on it. So anyway, that review's coming out. Be looking for it maybe tonight. All right, Mark. I'll talk to you later. Thanks for being here. I can't believe there's 11 of you guys here. We're doing this. It's getting more popular. So. All right, guys, thank you so much. Hit me up in Discord if there's anything you need or any trades you want me to look at for tomorrow, earnings trades or whatever. We'll do them tomorrow. Just put them in Discord. All right. See you guys. See ya.